If you're sitting in a room with 10 adults, 5 of them have no clue what they're doing with their money. Only half of Americans can pass a basic financial literacy test, meaning most people make decisions that determine their future while navigating completely blind. We are going to fix that. By the end of this 6-minute video, you will calculate your exact financial now, a baseline built on 3 specific numbers that reveal exactly where you stand today. Once we have those numbers, we'll move into action by setting up your first automated wealth building transfer. To follow along, open a blank spreadsheet or grab a piece of paper and log into all of your bank accounts and loan portals right now. Building wealth requires replacing vague anxiety with precision. We are going to map your actual mathematical coordinates. Step 1 is calculating your net worth. This represents the total value of everything you own minus the total of everything you owe. First, list your assets. Add up the balances in your checking and savings accounts, retirement funds, the current market value of your car, and any real estate you own. Next, list your liabilities. This includes all outstanding debt, credit card balances, student loans, your mortgage, and any remaining car payments. This chart shows how those 2 columns interact. If you have $40,000 in total assets, but $60,000 in liabilities, subtracting the debt leaves you with a net worth of negative $20,000. If your result is negative, you're in good company. According to the Federal Reserve, the median net worth for households under 35 is less than $39,000, driven largely by student debt. Treat a negative net worth as your baseline XY coordinate. It marks your starting position on the map, providing a fixed reference point to measure your progress toward wealth. Step 2 is finding your monthly cash flow. This requires tracking every dollar entering versus every dollar leaving your accounts over one full 30-day period. The income side is usually straightforward. Write down your take-home salary plus any money from side hustles or freelance work. The expense side is where most people find hidden leaks. Track everything, especially subscriptions and irregular online purchases that often slip through the cracks. This updated spreadsheet shows the cash flow equation. Subtracting expenses from your income reveals your true monthly baseline. Here, we have a positive surplus of $300. If invested monthly at 8%, in 30 years it becomes over $460,000. The engine driving that growth is compound interest. Albert Einstein allegedly called it the 8th wonder of the world, because you earn returns on your original investment and then returns on those returns. Cash flow is the primary engine of wealth. Without identifying and securing a monthly surplus, long-term financial progress is impossible. Step 3 is calculating your financial runway. This tells you exactly how many months you could survive if your income disappeared tomorrow. For your runway, we only count liquid savings you can access immediately, like checking or high-yield accounts. Retirement and real estate don't count. Divide your total liquid savings by your monthly expenses. $9,000 divided by $3,000 equals a 3-month runway. If your runway is short, you aren't alone. 37% of adults cannot cover a basic $400 emergency without borrowing money or selling an asset. Operating without a financial safety net forces you into debt traps. When emergencies strike, people with zero runway must rely on high-interest credit cards, turning a temporary crisis into a long-term burden. Your runway number determines your immediate strategy. You must build your defense before you can focus on offensive wealth building. Now that we have the data, we need a system. If you try to save whatever money is left at the end of the month, you will likely end up with nothing. We are going to take a portion of the positive cash flow surplus we found in Step 2 and use it to build the financial runway we calculated in Step 3. In your banking app, select Transfer. Choose your checking account as the source, pick high-yield savings as the destination, and enter an amount, like $50. The most critical setting is frequency. Change it to every payday and hit Save. Psychologically, you must view this automated transfer as a mandatory bill. It is a non-negotiable payment made to your future self. Automation removes the need for willpower. It is the bridge that turns your good financial intentions into guaranteed wealth accumulation. You've now finalized your Financial Now document. You possess exact, documented metrics for your net worth, cash flow, and runway. Save this document and set a recurring calendar reminder to update these 3 numbers every quarter. By setting up that transfer, you've created an invisible system. It works in the background, growing your wealth while you sleep. The gap between knowing what to do and actually doing it is now closed. You are an active participant in your financial